Okay, happy Monday, everybody. Wow, very fast already. We're nearing the end of the month. My God, things are so fast nowadays. Okay, come, without further ado, let's start this week's sharing and see the 22nd of May. Now, so we are back to no news on Monday. So not much difference because nowadays I realize that as long as we, they are not expecting any rate announcement or rate hikes and stuff like that, things, the rest of the data, the inflation data, is actually pushing the trades towards our directions. So it's fine. I kind of enjoy that really. So today, no news. Tomorrow, you have all the PMI news coming out from the Europe as well as the US. Now, for the European-wise region, I am only focusing on the German one. Of course, you have the overall Europe one and you have the French one, but German being the leading European nation, they tend to carry more weight if anything happens, any results, unwanted results happen on them, that will carry much weight. So anyway, looking at the results over here, not much is expected of the data. You can see these are very, I would still say very slight changes right over here. So if we do not, unless we get any surprise news, I don't see any much changes. So with that, I think the euro dollar is expected to move upwards in an upwards trend right away, unless there's some surprise coming up from over here. Okay. For the pound, the same thing. The movement is about the same as the euro because of the results here. Not much changes too. For the US, on the other hand, these both sets of data is showing some slight weakness. So if this is too pushing up, this one should be coming down. Okay, because the current structure is actually supporting just a weak euro early in the week first. Now, when I say weak and what, this is more or less on a weekly movement or a day-to-day, and at least until Monday to Tuesday kind of thing, it should be down for the dollar. That doesn't mean changing the overall trend of the dollar. Yeah. So anyway, if the dollar has retraced already enough retracements, then yeah, it's a different case. It can be shooting up already after that. But anyway, let's just wait and see. The structure currently is supporting a weak dollar. So on Wednesday, you have the New Zealand official cash rate. So previously we had a 50 basis point rate hike. This time around, they're expecting a 25 basis point rate hike. So unless there's a surprise by the RBNZ again, okay, which I really did not enjoy the last surprise. The New Zealand dollar can move down after this. Okay, I expect it to go up and then down again. Okay, the corrective move up is done. We are looking for corrective move up. So early in the week, New Zealand dollar probably be going up. Then after this rate is done, then down again. So this is my expectation. And for the pound, there's inflation news. CPI year to year, we are seeing they're again expecting a drop in the CPI. So anyway, this time I think probably they can get a number below a single digit number already. So if the news comes out as forecasted, you will see the pound dollar dropping. Okay. And then on Thursday, you have the preliminary GDP. They're showing no changes in GDP. Unemployment claims is 7,000 higher, predicted to be 7,000 higher. So it depends if the dollar index correction is over by that time. So expect this news to make the last wave of correction. Okay. That means it's pushing down for the last wave, or actually establish a new change of corrected. That means going back to its original trend already. After later, I'll explain to you what is the trend that we are looking for. Okay. And Friday, the last news, which is the core PCE price index. Another important inflation news other than the CPI would be the core PCE price index. No changes in inflation is expected. 0.3 forecasted versus 0.3. So anything more than 0.3 would see the dollar index actually move higher. Now we had month to month CPI that showed a higher movement already in the dollar. So would the PC price index follow suit on a month-to-month? We shall see. If that is, then you will see the dollar actually moving higher. Okay. Okay, let's move on then. Now, Powell's statement during the monetary policy panel. This news came out on Friday. And I would like to discuss a bit because there are some statement inside there. I think it's important for everyone to know. Now, overall, if you look at his statement, Powell appeared to be on the side of pausing rates after giving his speech at the monetary policy panel. And the reason he gave was that due to the banking sector stress, banking sector stress, it is effectively assisting the Fed to combat inflation. Previously, Fed felt that it was just only them, raising the rates until the bank had stress. And now, due to this stress, the bank has to act upon it. And how do they act? In Powell's statement, he stated how the banks act clearly already. He said, while the financial stability tools help to calm conditions in the banking sector, developments there, on the other hand, are contributing to tighter credit conditions. You see, this is the keyword over here. Because of the banking sector stress, right, they are short of cash, right? To stabilize the financial sector, the Fed actually said that, how much money that you put in the for the bonds, right, that you can't sell right now. If you sell it will be at a loss. We will use that money, the same amount, and temporarily lend it to you, not an issue. So that in a way stabilized the overall banking sector, right? So, but due to the short of cash environment also, it's also contributing to a tighter credit condition because the banks are not lending out that freely anymore, and they have to double check and triple check whether it's worthwhile to lend to this particular client or not, and also at a higher rate. And when it comes to higher rates also, right, people might not borrow that much, right? So these actions here are likely to weigh on economic growth, hiring, as well, and inflation. Now, this is something the Fed is like looking forward to. They want to reduce the workforce, and then they want to control inflation. They want to bring down inflation. These are the two things that Powell has been talking about for a long time. So he added, as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. So because of these words over here, it's like he appeared to be on the side of pausing rates. So the latest development created a good feel for the US market, and only the debt ceiling negotiations prevented the market to react positively to this news. But it also helped, neutralize the debt ceiling negotiations also. Okay, that's why you saw the market is like down and then up. It's more like ranging for that part. Yeah. So that's what Powell said. Now, if you look at the rate probability, sorry. After the announcement, the possibility of a rate hike at the June meeting dropped to 17.4% from a 35.6% chance, Straight away, bam, it went down here. As you can see, I got this data from here. Straight away it went down. Now, the possibility right now for a rate pause is up to 82.6% from a day before, 64.4. Okay. So this is something that, we said that that's now a change again, and now the question is that when will we have that this is one pivot already, or we're known as the Fed pivot. When would we have the first rate cut? Because right now, even the July possibility rate pause possibility has already surpassed the 70% mark. It's right now at 80.6%. So The question right now is that I think the market is pricing in already a rate pause for the time being. The question is, how long would the rate pause be? Now, if you look at all the rate pause, from the time they do the rate pause until they do first rate cut, right? I think the shortest time frame was no less than 6 months. No less. Whenever they paused the rate, they actually kept it for 6 months or more. So is the Fed going to do something different right now? Because if you talk 6 months from right now, it's the earliest would be December. So we shall see. So we need to look at the rest of the progress, how if the banking situation deteriorate further, now we have 4 banks collapsing. If this turns into a catastrophe, probably there is a chance that Fed might do something. Okay, might do something, but we will see. Okay. Now, I think this is the thing that the whole situation, everybody's looking into this particular development right now. And that's why I think I want to spend some time here too, apart from what the Fed said. Okay, what Powell said. Now, like I said early on, the reason which prevented the US market from moving up was the ongoing debt discussions. Before Friday, we were inundated with news of both sides feeling positive, right, on an amicable agreement soon. That feeling evaporated and the market fell on Friday as the grand old party, the Republicans negotiators, halted debt ceiling negotiations after citing the White House terms as unreasonable. Okay, I said you wasted our time. Now, the only thing that prevented a sell-off in the US market was this Kevin McCarthy, the GOP's House Speaker, saying this: "We'll be back in the room tonight," indicating talks are still ongoing. Without the thing known as tonight, you would have seen the S&P 500 just collapse like that. Now, the White House is looking for a deal lasting beyond the current presidential term because they want to ensure the Democrats maintain their grip on the Capitol, whereas the Republicans are looking for a spending cap for next year. And truly, like I said, they are still far apart. Okay. Both sides are now issuing statements which give an impression a resolution will be achieved soon. The fact still remains, however, that expectations are still far apart. Both sides would see backlash from their supporters should a compromise be seen as lopsided to either side. Okay, because Kevin McCarthy of the Republicans faces pressure from his hard right flank, which could see his leadership as speaker threatened if he fails to deliver. Okay, so he will want to maintain that. Biden, on the other hand, is representing the Democrats because Democrats all said that let the White House be our representative. So Biden is facing increased pressure from the Democrats on possible cuts affecting domestic programs that Americans rely on. Because you must understand the Democrats, they have a very strong socialist thought. There are a lot of money. That's why when it comes to the Democrats, they actually spend more because they want to give programs this to help the US citizens, whereas the Republicans, they are more business minded kind of thing. So that's why it's very difficult for both of them to come hand to hand, as one is giving, yeah, but how do you earn it back? That is the question. And one is too much business, but so that is also issue. So it's a compromise that they need to work on. Okay, now how do I know that things can be a bit tough? One thing for sure, if President Biden is cutting short his trip, he was in Japan for G7 meeting, right? If he had to cut short his trip to return to Washington on Sunday, yesterday, things are not as smooth as it seems. Or whatever statements that have been issued by both sides is just to, cool things down. But if Biden have to come back, you know, it sends message out. Okay. So anyway, both of them, Biden and the House Speaker Kevin McCarthy, will be having a meeting today to resume their negotiations. We can only hope for the best. That's all I can say. Okay. So stay tuned for the updated developments. I'll probably report it on Wednesday. Okay. Right. So next.